Before investing, carefully consider the fund's investment objective, risks, charges, and expenses contained in the prospectus available at roughetf.com. Read carefully before investing. The Alpha Dog ETF is distributed by Foreside Fund Services, LLC. Welcome, everyone. Today I'm joined by Eduard Hamamjian, the Managing Director of the GeaSphere Advisors. Eduard, first time joining us. Thanks for being here. How are you?
Absolutely my pleasure, Mike. Thank you. I'm great.
Awesome. Glad to have you here. Eduard, particularly prescient time to have you with us. This is the first time you've joined our channels. We're really excited to get you and your advice in front of our markets and our retail investors on a regular basis. But right now, like I said, particularly prescient. Markets are selling off. Investors are getting nervous with these recent declines, especially the last couple of days. What should investors do right now?
Well, great question. Very timely. So first, to answer that question, it's really important to establish the foundation for where we are in the larger market cycles. Think big picture. So first, I'm going to give you a quick market history, and then I'll answer your question directly. First, we have secular markets, right? So these markets on average last 15 to 20 years. As an example, if we go back to 1980, specifically July 1980, that was the beginning of a secular bull market that lasted all the way until March of 2000. Okay, so that's a long period, 20 years thereabouts. And over that period of time, the market had many corrections, including corrections like Black Monday, which at the time seemed like the world was ending. But it wasn't, of course. It was a tremendous buying opportunity. And during secular bull markets, that's what we get. We get tremendous buying opportunities because we know markets are going to rise for a certain length of time. My research shows me that it's on average somewhere between 15 and 20 years. So with that as a backdrop, if you understand that you're in a secular bull market and not in a bear market, this is nothing more than a fantastic opportunity.
So that makes total sense, right? When we're looking at the market as it is and why it could be an opportunity, what other evidence can you kind of pull together and show to support the secular markets and the fact that they exist?
Well, the very first thing is to simply look at a long-term chart. I mean, it's clear, it's obvious, really unmistakable. And these markets have a certain personality to them. So as an example, during secular bull markets, it is normal for the market to pull back on average 10% twice per year and then ending higher at the end of that. The way I explain it to clients always is if you get a 10% rise, expect a 5% decline before the market regroups and goes to a higher high. That's normal. That's the normal ebb and flow. And we are in one of those normal declines right now.
Okay, again, makes total sense. And naturally, when you look at it over a long-term cycle or a long-term chart, it's unmistakable, right, was the word you used. The market's been selling off lately, especially the last couple of days. Retail investors will notice this and feel the pain, of course, of what we've seen over this week. With the market selling off, are there shorter-term cycles in these secular markets?
Absolutely. There are many short-term cycles. And, we call them corrections. There are many names for it, but the reality is the market is pulling back. So this pullback essentially started a few weeks ago, the one we're experiencing right now. And during these pullbacks, you simply have to have a game plan in place. So very simply. So right now, the market is pulling back. We recently broke through key levels, both in the NASDAQ and the S&P. And as a result, we have a confirmed breakdown. I fully expect the market to go to a lower low, likely another 10 to 15% lower from current levels. We're having this conversation on January 22nd. So from here, we got about 6 weeks, maybe 7 weeks of pain before the markets find their final bottom. And then likely from there, we have a bottoming process and the market will begin to rise again. Again, this is a buying opportunity, not today, but a few weeks from now.
Okay, again, totally making sense and tracking with you here, knowing what the market is likely to do from here over the next 7 to 6, 7, 8 weeks. When we're looking at this from an investor's perspective, what should investors be doing right now? Obviously, you've said it's a buying opportunity. We know what we're looking at 6 or 7 weeks in the future. What should investors be doing right now?
Well, investors should be hedging their current positions. Investors should not be trading in the markets. They should buy long-term holds and hold on to them. Great companies like Microsoft, Apple, Google, and the emerging stocks that are coming, the next crop of game changers, those stocks that have gotten hit the most recently. And examples that I would give, although I'm not recommending any of these for individuals, but these are great examples. Companies like SoFi, Square, PayPal. These are companies that are changing the way we do business today. And there are many other examples. I see these companies as wonderful companies to start building positions in. We will likely get better opportunities in the coming weeks at better prices. But these companies are here to stay, and they likely will go much higher in the coming years. And for that reason, it's important to take these opportunities during pullbacks to start building positions in what I call the alpha dogs, those companies that will ultimately change the landscape.
Love it. Okay, I love that term, of course, the alpha dogs, the companies that are going to be changing the landscape. Last question for you, Eduard, the first conversation we've had with you, right? When you're looking at this from the average retail investor perspective or the average person perspective, which is a great deal of our audience, can the average person do what you do and take your approach to the markets that you take?
There's nothing magical in what we do. What we do is simply work hard day in and day out. We buy the leading stocks of leading sectors, and then we take those stocks and we sell covered calls against them. Basically taking in income every single month. And then when needed, during periods like this, we take that revenue and we hedge our portfolio to help us ride out these corrections as we receive them. Now, can other people do that? Well, of course they can. Why not? I have faith. But it is a full-time job, and it does require tools, and it requires a certain background and understanding for how markets work and how these derivative products work. And if you don't have that background, why do it? It is a full-time job. Let us do it for you. We would love to.
Outstanding. Eduard, well, great advice for the audience. And again, like I said, particularly prescient this week, particularly as we've watched the markets drop and have some choppiness. So great advice here. Eduard, we can't wait to have you on again soon. Great advice. Thank you so much for being here today.
Absolutely my pleasure, Mike. Thank you.